Morning, everybody. It's the 10th of November. We're Signal Centre Talking Ball. I'm Joe, joined by Steve and Taff this morning. How you doing, gents?
Yeah, really good,
Good
thanks.
man, good.
Excellent. A little bit of a delay this morning, just a few issues with the stream, but hopefully all up and running now and everyone can see us. As always, feel free to get involved on the chat. If there's any charts or markets that you're looking at other than the general ones that we cover, please feel free to post them up and we'll do our best to cover them off. Okay, let's get into the latest headlines then. Another interesting day yesterday. Fed speakers debated mandate tensions. The Chicago Fed President Evans stated that much higher rates will bring the Fed's employment mandate into jeopardy and saw benefits in making adjustments to the pace of rate hikes soon. The Minneapolis head stated that he did not know what discussions would be in December. He added that he wanted to see how the economy evolves to reduce the risk of overshooting, but he also commented that it would be entirely premature to talk of a policy pivot. The US yields edged lower yesterday. They posted limited net gains on Wednesday as the trend continued in Asia on Thursday, with the 10-year yield retreating to around 4.07%. Equities were unable to gain support from lower yields and actually posted losses yesterday. Russia has announced its Kherson withdrawal. In an announcement yesterday, Russia announced that it will withdraw from the Kherson city and regroup on the eastern bank of the Dnipro River. The euro spiked higher on the report, but failed to hold on to the gains with significant net retreat on the day as the dollar regained ground. Today is all eyes on the US CPI data. The latest consumer prices data will be released later on. The consensus forecasts are for prices increasing 0.6%. For the month, and with the year-on-year rate slowing to 8% from 8.2%. And of course, we can also mention what's going on with the cryptocurrencies. They certainly remain vulnerable. There was a bit of a rout on them yesterday, and they've attempted to recover this morning, but selling pressure has resumed quickly, and Bitcoin dipped to a fresh 2-year low following the collapse of Binance's takeover of FTX's operations. So that's probably a good point to get into the Bitcoin charts. Steve, if you want to bring that up and
Yeah, lovely.
talk us through how that's looking now from a technical perspective.
Yeah, let me share my screen. And it's happening, ladies and gentlemen. Bitcoin is getting
Breakdown.
battered. It's through the level. And
Wow.
where do we go from here? This is the overriding chart we've got. I'm going to take a look at Bitcoin, Ethereum, and look at Ripple as well. Because there's, we are sort of like seeing this real difference in demand through the different assets, through the different cryptos. But let's really take a look and focus on Bitcoin first. This is the weekly chart, and let's consider really. Let's not forget about the all-time high that was posted in December 2017. We got up to just under 20,000. So that gives us good reason to believe that 20,000 is a significant level. Once we broke through it in December 2020, then we had the break up to the highs, and this resulted in a head and shoulders formation. Now, the measured move to this head and shoulders formation is actually a negative price. I don't think that's going to happen, but it really tells us that now we're through 20,000. Getting back above it faces a real tough battle for the bulls of Bitcoin. You can see on this weekly bar, this weekly chart, that this is this week's price action. We're through. We're seeing prices we haven't seen since that November 2020, as Joe said, about 2 years. So this is significant, and really we got to look for next level of support. If there is any, I'm sure there is. I'm sure we're not going to give up on Bitcoin just yet. But let's take a real look at the most recent swing low with price action rallying back. And again, you see the sort of like the makings of a head and shoulders formation, potentially another breakdown, something similar to this. We could be looking at a move like this, targeting a move to around about 10,000, nice round number. We do have support before then. We expect to see at least some sort of support coming in at 13,850. Then we're into this mire of support all the way down. So, and if we look at extensions lower, the 10,000 8,000 for me is a really key level as well. And we could be seeing these levels in the not too distant future. The dollar strength has picked up again, and that's quite an interesting chart. I'm sure Joe's going to dive into that. But the dollar obviously returning to a little bit of strength. If that continues, again, that will pressure the Bitcoin against US dollar price. So they're the levels to watch. 17,600. Expect resistance there. I think selling into rallies is probably the way to go at the moment. Also, we've got Ethereum. Ethereum's broken down through the 11,057 level. We're just back above it now. We've posted a new lows again that we haven't seen since earlier in the year, July this year. So these are the areas we're targeting. There will be support around these levels, all the way down to around about $1,000. Again, nice round numbers. We like that. Under pressure now, and I expect resistance to come in the shape of around about 12,222 on Ethereum. And Ripple, you can see how it's broken down here. We had this inverse head and shoulders. It played out rather nicely. Got really close to the measured move target, which was at about 57, 58 cents. Stalled just in front of it, and then formed this triangle formation. We've been playing around this triangle formation. We can actually make it, well, call it more of a descending triangle formation. It's broken down to the downside, and it's run back straight into this support area. This should come in support really all the way down to 28.70 cents. But we're back down to the right shoulder lows that we saw in September. So really under pressure, Ripple. This is the coin that everyone talks about going to, 100 times, 1,000 times X, but not happening anytime soon, despite everything that's going on with the SEC. Obviously, we've sort of seen some real fundamental news in cryptocurrency with the Binance and what is it, the XPT or something?
FTX.
FTX.
FTX, yeah, whatever three letters you put in front of that, it doesn't sound great. And yeah, a little bit of a sort of like an amazing story, sort of like developing there over the last few days, has led to confidence in the cryptocurrencies taking a hammering overall. So yeah, any other cryptocurrencies you want us to take a quick look at, bring them up, and we'll take a look at maybe later in the show. But I'll pass over to Taf now to drive through the commodities.
Commodities. Yeah, let me do that. Um, just before I go there, I found it interesting. I was just looking at my Bitcoin chart, my sharing. Yeah,
Yep.
okay. I'm on now, yeah. I was just looking at my Bitcoin chart, and then I marked a certain point here. You can see right about this time here. This is like March 2021. This is when Michael Saylor came out on TV and said, "Listen, this thing is going higher. Sell your mortgage and just get into Bitcoin, right?"
Lovely.
That's exactly what he said. Just mortgage your house and get into Bitcoin. It's not going any lower than that. And then just trying to see. I'm just trying to see what the yeah. This is where we are now. Like
Yeah.
70% of your value would have been eroded there. You should listen to that guy.
So basically, your
Seven-
house is now a garage.
It's now it's not even a garage, man. It's not even a garage, man. I mean, it just goes to show how important it is when you listen to whatever you think is financial advice to really just do your own due diligence and not just take it as it is, man.
Yeah, absolutely.
Yeah, those disclaimers really mean something because someone I'm sure made a bad decision and sold something really important and now they're down 70%. It's
Yeah.
crazy. But I digress. Let's go to crude oil. So yeah, interesting chart on crude oil. This is on the daily here. You remember I said that on long term here I'm bullish oil, but then the chart is not, the daily chart is certainly not showing that bullishness. We seem to be forming some sort of a double top formation here. We're approaching the neckline zone, which is I think 84.40. This resistance, this support down here. If we break that, then I think we're getting into double top territory, and we could possibly target this previous swing low at 76 right here. So this is I think this is the area to watch out for. If we break that, then we're definitely in trouble. I think this was also exacerbated by the fact that I think we've got COVID concerns in China I think Guangzhou was locked down again, and whenever China does something in terms of COVID, then crude oil would take a hammering, or it would be a tailwind because of the amount of crude oil that the factories in China consume. So on an intraday level, we are approaching a first support zone that I put here. We broke out of this trend line support that I had put here. We just easily just broke through it because of those lockdown concerns in China, and we seem to be approaching this support zone here. This is the first support. It's 83. Well, I think it's 84 to around 84.42 or 84.40. This is our first support. If price manages to if it has enough momentum and it breaks through this, then we are definitely headed for the second support, which is our 82.70 level there. This second support is quite significant because this ties up with with this level. Yeah, this ties up with this. It's the neckline of the potential double top. So if we break that, then we're potentially going even lower down. If, however, the first support here holds, then we're likely to get a correction up, and probably come up to the trend line resistance with the support, but then it becomes resistance now, and then possibly go to the first resistance, which is 81.60 to 89.20. So for today, I really pretty much envisage a price to play around the first resistance and the second support. Bear in mind also that we've got CPI numbers coming out today, so that will definitely affect the US dollar. And if we have volatility there, then we might also have a bit of volatility on the commodities, crude oil included. Let's go to gold. Gold had a with a bullish run. Let's just go to the daily. Yep. So I spoke about this triple bottom here. The bulls came in here. It seems the bulls are really defending this 1615 to 1621 zone, and we saw that also on Friday when NFP numbers came out, and we really had a strong momentum, and the bulls came in, and then they pushed price all the way to this. It was a resistance zone. We had this candle here that looked like a hammer, but then it looked like a hanging man, but really, I think the momentum from the Bulls was uh, was really strong, and on Tuesday we had a follow up to that Friday NFP strong candle. What we saw yesterday is we reached this resistance at 1714, and we seem to have a bit of retardation in terms of momentum here. I think this is to be expected because of like I said, the inflation numbers are coming out today. So gold will really pretty much react to that, because if the CPI print comes out stronger than expected, then it means the traders will be trying to price in a 75 basis point hike for December when the Fed comes out, and that will boost the dollar. So if it's stronger than expected, then dollar goes up, it means gold is going to go down. So I think that's another thing to watch out for there. I think we have a bit of volatility on gold. Our first resistance is coming in at 1714. We already touched that resistance, and we seem to be getting a bit of selling pressure from here. We have a second resistance at 1750. If we break this, then I think this is the target that we'll be looking at, 1750. On the bottom side, we've got a zone here at 1672 to 1679, somewhere there. I think this is our first support. If price comes down, then possibly we could have a bit of we could have bulls coming here and try and just take price up. If we break this first support, then our second support is going to be at 1644 to 1650. So I envisage price to really play between, because of the volatility that I'm expecting on the CPI print. If it comes out and it's volatile, then if the US dollar is volatile, then probably I would cap my range at 1750 second resistance, and the second support here at 1644 to 1650. So I think this is pretty much the zone that price is going to play at. My bias, however, is a continuation of the upside, but only if we come to the on deep if we come to the first support here or the second support here. That means we're buying deeps, but really deep deeps. All right, let's go to nat gas. Nat gas is an interesting one because we broke out of. Okay. So initially we broke out of this long-term trend line here, medium-term trend line that's stretching all the way from January here. We broke out here on, I think on Friday, the other week. We broke out here, and then momentum took us up again, and then we seem to be testing this zone. But what happened is we just we overlapped the trend line and went up to a resistance zone at 7.14. And I think this happens all the time, you know, with these trades in that it takes the traders in, because here traders would be thinking, okay, fine, so we've broken the resistance, so possibly we could go higher, and there's a lot of liquidity here, and then it did not go high. Instead, it just plummeted down, and because of the liquidity of the traders that were trapped in there, you can see that the downward momentum is really strong. So let's see what it looks like on the intraday basis. This is what it looks like on the intraday basis. We actually gapped up from the NFP candle on Friday, went to this resistance, took liquidity, and then from there it's just been a lower high, lower high, lower high, lower high, and I envisage that to just continue. There's no reason for breaking this trend. So I think we're currently at support, and we seem to be breaking that support at 6.0, and second support, which is probably be my target for this commodity, is around 5.35 to 5.50. This second support here, I think this is my target for this. So any gains that we see in that gas, I think we'll look to just short any gains here that we see. This was my gun to the head trade for, I think, Monday. I just left it there for, it's a souvenir, just to remind you guys that I I hit the TP. So yeah,
we did mention it, mate. Don't
oh,
worry.
you did. Cool.
Yeah.
Yeah, so that gas is, bearish, and but then this has no inclination on the utility bills again. Like I said, you know, it keeps going lower, but then you won't get any reprieve from the utility providers. So yeah, looking to short any gains that we see on that gas. Yeah, I think that's it from my side. Joe.
Well done, Taff.
Thanks, Taff.
Nicely done. Okay, let's take a look at FX then. So starting off with the dollar index. Got a little bit excited about this yesterday because I thought we were in the process of topping out and was going to break down through this support of 109.53, but it hasn't happened. And in fact, yesterday we posted a pretty strong looking candle engulfing all of the losses that we posted on the previous session. So we are flat as things stand at the moment. I expect we'll be in a bit of a holding pattern until 1:30 this afternoon when we have the CPIs out. And as Taff mentioned, if that number comes in hotter than expected, then I would expect that the dollar will move higher as people will be concerned, and that will cause money to rush back into this as a safe haven. So we are getting some indications that risk might be starting to return, and people are looking for riskier assets. We looked yesterday at a few of the dollar market. So Aussie US dollar looked as though it was about to break up through a neckline of a head and shoulders top at bottom at 65.22. Didn't happen, and yesterday we engulfed all of the gains from the previous session. Still, this isn't dead yet, I wouldn't have said. I mean, there is still potential for it to break higher, but it needs to get above that 65.22 on a closing basis to confirm. Looking at some of the other Aussie currencies, they looked as though they took a bit of a hit yesterday. Aussie Swiss was quite interesting. That rallied into a resistance at 64.11 before retreating lower with a big red candle yesterday. Aussie yen looks to be rolling over as well. And I looked at Euro Oz, which looked quite interesting as well. We've got a double bottom pattern that formed here above the resistance at 53.54, and looks to have formed a bullish flag as well. So it looks like that's heading higher. Measured move target of the double bottom is at 163.80. Let's take a look at Euro US dollar. That was on the verge of breaking higher as well, above this 100.93 level. Still hasn't managed to do it. A bit of a bearish engulfing candle yesterday. Needs to get above this level before we can start talking about this being a bottom. But it's still on, I think. But we'll have to wait and see what the CPI number does later. Thank you very much for those coins, very much appreciated. So what else have we got? Cable. Let's take a look there. Still trading below this downtrend line. Rallied into the level yesterday. Looked as though it was going to break out. Hasn't happened, and a big red candle swiftly followed. So still below the downtrend line, still needs to do a bit of work to overcome that. Once it does, then maybe we can start looking for higher prices. But again, I think a lot of this is going to be down to what happens with this CPI number later today. Let's take a look at some of the other dollar markets. This was looking really exciting. Big head and shoulders top. Looks as though it was breaking down and going to start heading towards the measured move target. But we posted a bullish engulfing yesterday, so getting a bit of a chop around on that. Again, still think this could play out, but it's certainly not going to be a straightforward ride. Dollar Swiss was the other market that looked to be forming a double top, breaking below that 98 level, which was my gun to the head trade yesterday. I was offside by about half an hour on that yesterday. Looked as though it was going to break down, but then we're getting a fair amount of mixed signals at the minute. So I think really it's all eyes on these CPIs later today. Just before you get onto the indices, Steve, last time we saw CPIs, I think it was the 13th of October. You might want to look at that level on your charts on the indices, because that pretty much called the bottom when that number came in hotter than expected. We saw a really big reversal.
Yeah.
Not sure if we'll see the same thing again today, but you can run us through it and see what you think.
Yeah, no worries, mate. I'll dive into that now. Let's take a look at them. We'll start with FTSE. Obviously, FTSE is one that Joe was talking about yesterday. He's pretty impressed with how FTSE has performed. And if we look at it, this inverse head and shoulders that we highlighted a few moons ago has hit the target and settled down a bit now. But we got a nice, well, it's quite a sort of strong trend line, quite an acute trend line. So got be a little bit careful with this. Obviously, plenty of support. It's hit it on a number of occasions, 4 or 5 occasions. Had a little bit of a breakthrough on there, and then Joe's referring to this day. We formed a bullish hammer around the lows, and this led to this move higher. So yeah. It's a big number, CPI. Everyone thinking about inflation. Are the Fed going to continue at the rate they are expecting? Could see a sort of a decent reversal here if it does come in as a sort of like a really high number. Then we're thinking about interest rates picking up again. That'll impact on the indices. Breaking it down on the shorter term chart in FTSE, we've seen a nice little rally from a nice little bounce here off the lows over the last hour. So really picking up. Resistance should come in around about 7,315, and we've also can draw in a nice little trend line and get some trend line resistances coming in right now here live on the show. So level to watch there. If you're not convinced by the indice rally, nice level to fade this area here, but be really careful, because when these indices do rally, you can really get caught out by them. So make sure you have your stop at good levels. DAX is really performing well. This is the hourly chart. Let's take a look at the daily chart, and we can see we're above resistance that we drew from the sort of highs or from 13th of September. And again, I don't know if that was a CPI day. Might be worth looking at that. And we can see the sort of like the low of the 13th of October. Joe just mentioned again the reversal in front of the swing low that we saw on the 3rd of October, and a really nice strong move higher. We can actually maybe even draw that channel a little bit differently and say we're still in that corrective channel. We're through resistance at the moment, but there's further resistance to come. But we are above this downward trending resistance line, and Joe really likes this. We've come back, retested it, and we're moving higher. So potential for, let's get a Fibonacci on there, potential for a deeper correction higher. Looking at this is the high. Take the high to the swing low, and we're above the 38.2% fib retracement level. So again, looking really next to target, and maybe a move to 14,000. The US has got these inverse head and shoulders on both the Dow and probably a better one on the S&P. We're not really seeing it yet in NASDAQ. NASDAQ is obviously more tech sector. But let's take a look at the Dow and how it's breaking up. We've had a 78.6% fib retracement. And again, if we look at this candle that formed on the 13th of October, a month ago, when the CPI was out last, that really put in that double bottom which played out really, really nicely indeed and hit that target on the 28th of October. So really nice move higher and didn't really see much pain on that. Yesterday's price action is a little bit concerning. It's a bearish engulfing candle, and the previous days was almost shooting star like, but not quite a shooting star. The body should be smaller on a sort of perfect shooting star. But nevertheless, it still had the same type of price action. We had the rally up. We almost took out the 26th of August high, not quite. And then yesterday's reversal. And we're really sort of like deciding now where to go on the Dow. Shorter term chart, let's take a look at the 4-hour chart. This is where we see potential for a topping formation. Really it needs to sort of like any dips likely to hold around about the 31,700. But remember what the volatility that we're facing, that could change very quickly indeed. NASDAQ still in a bearish channel at the moment and really, really struggling. We've got a bit of a trend line we can draw in, finding a little bit of support, a little bit of some good news for NASDAQ. On the 4-hour chart, that support comes in around about the 10,600 level. The horizontal support coming in at 10,600 dead. And yeah, and that a break there. Obviously, we've got like 1, 2, 3, 4 touch points on the 4-hour chart, so a nice trend line. That'll be quite pivotal today. Resistance expected around about the high yesterday and the downward trending channel line, top line, coming in at 11,200 on the upside. And this straight away, my eyes, I put it perk up. I always like get excited when I see head and shoulders formations, and this on the 4-hour chart for the S&P. Are we coming to an end? It's a downward sloping neckline, so potential for a bit more of an aggressive move. But that is, yeah, really sort of like for me, 3,700 is key to hold. If we don't hold 3,700, there is potential for the trend lower that we're seeing on the medium term basis to continue. So that's definitely one to watch out for. Any others? The Aussie 200 seems in a nice sort of like corrective channel at the moment. That's looking pretty good. Support expected around about 6,850, where resistance at the moment we're capped around about the 7,000 level on Aussie 200. So they're the levels to watch there. Any others, or we all good?
No, I think we're all good, Steve. Nicely done there. So let's move on to the gun to the head trades then. So yesterday we picked a couple of ideas which you will be able to find on our TradingView profile. Let me just bring them up, and let's go here. So no TAF yesterday, so it's just Steve and myself, and we were looking at this double top on dollar Swiss, and it looked really nice initially. We've got a nice breakdown from potentially a flag pattern as well, but if we click the play button, we can see that it just pretty much faffed around close to where I got in. Eventually 0.57 R offside at 9 o'clock when we closed these trades out, so no luck there. And Steve, you were looking for oil to bounce.
Oh, don't show me it.
In front
Don't
of the
show me
trend
it.
line. Sorry.
It's because Taff told me it was going higher. That's all. That's how I got into that one. I got sucked into that by Taff.
Disclaimer, Steve. Not
No, the risk reward was good, but it's like failed miserably. I'm devastated. I have got a humdinger today, but if anyone that's watching the show wants to join this, me and Joe said yesterday it'd be nice to sort of like get some of your trade ideas, and then maybe we can post them. We'll review them, and if we think they're a good one, we can post them ourselves, and maybe we'll give you some coins. We've got coins to give away, so why not?
Absolutely, yeah. The best trade ideas, we'll get some coins. We would love people to participate. I mean, just to clarify, what it is that we do. We pick a trade idea live on the video. We come up with this idea pretty much as if we had a gun to our head. We've got to make a very quick decision. All of the trade ideas that we come up with must have stops and targets. So if you are to get involved, don't just say you're buying or selling a certain asset. We need stops and targets, and your risk reward on these trade ideas must be better than 2 to 1 for it to be considered. These ideas will be closed at 9 p.m. UK time, or when the stops or the targets are hit. We update these trade ideas onto our TradingView profile. So if anybody wants to follow the progress of them, you can do so by visiting signal_center. Thank you very much, Sanadid. Okay, let's go. Steve, you've got a humdinger. Let's see what you got.
Oh, okay. Now the pressure's on. Right, I'm going to, before anyone else gets it or grabs it, I'm going to do, actually, I'm going to do it for my crypto chart because I drew it on there a little bit earlier. Oh, it's on the 4-hour chart. It'd be on the hourly chart. Look at this one. Right, yesterday's price action. Let me just give a little bit of color to this. Yesterday's price action was very positive. We had this trend line. Joe's trend line might be a little bit different to mine. I don't know why, but I think you were showing a little bit of a break on your trend line yesterday, Joe.
Yeah, I've reviewed it, and I'm not sure it has. I'll go with your trend line.
Yeah, this one looks pretty cool. Bullish engulfing candle yesterday, very strong candle at a really important trend line support level. So that's the main reason that this is highlighted to me. Today we're seeing sort of positive price action already. But then look at the hourly chart. I really like this on the hourly chart. Oh,
I saw
inverse head
that
and
too.
shoulders. Did you? Oh, right. No, I'm taking this one though.
Yeah.
Before you get carried away.
Yeah, no.
But to me, this is a pretty decent opportunity because on these types of formations, we can be quite aggressive with the risk reward. So I'm looking for the high here as being a potential. We could even draw a Fibonacci and get some other interesting levels to look at. But also we can look at the measured move target for this head and shoulders formation. We take the head to the neckline and extend higher. So the measured move target is actually back to this level. I'm going to step inside it. I'm not going to sort of get too greedy with this one, but I mean, it's only got today to run, and CPI, what better chance or opportunity. Now, this is a potential inverse head and shoulders. Remember the word potential. It's not a inverse head and shoulders formation until we break that neckline. Yeah. So I'm sort of getting involved way too early, but that's the name of the game for me. And that's how I roll, baby. So the risk reward on this is around about 5-1. Let me tidy it up to make it exactly 5-1. Really going for it. Yeah, if that plays off, I'll be dancing around lively on the show tomorrow. Can anyone beat that? I don't know if they can. Let's see. I'll post this up now.
Lovely, thanks, Steve. Taff, you got one ready?
Yeah, I've got so mine was based on what Steve just said, but I was just looking at the dollar index, and then I just saw that, look, this support here on the cloud, on the Ichimoku cloud, was really price couldn't go over that. So I'm looking for the dollar to probably go up today. And as Steve mentioned, I looked at the hourly, and voila, we've got that that bullish head and shoulders. But my trade now is on gold rather.
Yeah,
interesting. So I'm doing gold rather. We've got this resistance here. I mentioned this resistance here on gold here, and price seems to be going up, and then it's getting rejected from that zone. So I'm going to play the dollar index, but on gold, and I'm going to short gold at markets at this resistance here, and I'll put my stop loss just slightly over this highlighted zone here. So yeah, so I'm selling at market at 17.07. My profit level is 16.78, and then my stop is at 17.19 with a risk to reward ratio of 2.48. So this is quite risky because gold with CPI, it will really come up, and it might take me out, but then I'm just gonna play it and see how it plays. Yeah.
Nice one.
Okay, good luck. I'm going to be quite stubborn and try and sell the dollar again. Just really like this setup on dollar CAD, really. Nice head and shoulders top. Yes, we've overshot the neckline a little bit here, but for me, it looks like we are maybe going to trickle lower from here. So in terms of this right shoulder that we formed, just this move down here, we have retreated to a 38.2% fib level and posted what looks to be a bit of a shooting star candle. So I'm going to try and sell dollar CAD. I mean, the measured move target's all the way down here, which, do you know what? on CPI day, who knows what can happen? Let's go for it. I'm going to put my target down there.
Yeah, you never know, man.
I'm selling it at 135.18. I've got a stop loss at 135.75, and I'm targeting a move to complete the head and shoulders formation and hit the measured move target, which is down at 130.10. 9.19 risk reward on that today. Highly speculative. Obviously, lots going on with the CPIs. So, but who knows what can happen? If we get a big dollar dump, then that could play out.
Yeah, no chance.
Yeah, no chance. Well, hopefully one of us is right anyway, Steve.
Well, one of us should be right, I think, shouldn't we?
Yeah.
It could be one of those volatile. Yeah, volatility could take us both out. Who knows?
Yeah, it could nick us out and then go back right where we thought it was gonna go.
Yeah, I hate that when that happens.
That does happen more than you think. Okay, so later today, as we've talked about on pretty much throughout the show, we've got these CPI numbers which are due out at 1:30 UK time. We also have the US jobless claims out at the same time. And then tomorrow morning, prior to us coming on the stream, we have the UK GDP reading. So that could be quite interesting as well, and create a fair amount of volatility around anything linked to sterling first thing in the morning. So that's that for today. Hopefully everybody's enjoyed it. As we said, please feel free to get involved going forward. If you've got trade ideas that you want to share with us, that would be great. And good luck today with the CPI numbers, everyone. And we'll be back tomorrow morning.
Cheers, everyone.
Bye-bye.
Bye.